mean, I think there's a lot more risk than people realize because monetary policy around the world has created massive amounts of debt globally, both at the country level and at the consumer level. They are making significantly more currency by buying back securities, which at some point is going to lead to inflation. So to get to your question, equity markets are trading near all-time highs. PE values are extremely high. Most of the returns are coming from the largest companies that are trading at very, very large premiums to what middle-sized companies and small companies are trading at. And, I think it's a bubble. How can the market be hitting all-time highs when we have a global pandemic and we have a contraction in GDP? These people are obviously thinking that there's going to be a very strong rebound in the economy. And I do think there will be a rebound in the economy, but not enough to justify the valuations we have. There's also just a lot of risk. I mean, no one knows when a vaccine is going to be developed, whether the vaccine is going to be effective or not. No one knows when inflation is going to come back, and someday it will. You just cannot continue to increase the amount of money in the market and not have inflation rise at some point. So everything's being priced to perfection, and I don't see perfection right now. So when you look at the S&P 500, the performance doesn't look that bad year to date because it's being driven by a small number of companies that have done very well. But the average company in the S&P 500, if you didn't market cap weight it, is down 11 or 12%. And the reason I'm not sure that's the case is it does impact investor confidence. It impacts how much money consumers spend. I mean, if they're worried about the economy, they're worried about their future, they spend less, and it has a domino effect. So there is a psychological aspect to how the equity markets are doing, and if they are selling off significantly, it can lead to companies laying off people. It can lead to decline in profits. And part of the scenario where these stocks are, a lot of people think there's just going to be this huge rebound in earnings and GDP, and I just don't see the rebound anywhere near as strong as what people think, because there are a lot of companies that are going to go out of business. The retail industry has been absolutely destroyed, and it's just terrible what's happening to restaurants and malls. That they have expenses. They have to pay rent, and they have inventory, and they have employees, and they're not getting revenue. And those that are going bankrupt, they're not going to be able to rehire all their employees. So, a lot of companies will rehire people, but there's a lot that won't. A lot of these jobs will be permanently lost going forward. And, it's hard to predict. Will there be a big sell-off? I don't know. But I think when people invest, they need to at least have that in the back of their mind. You don't. This is not the time to take a lot of risk. You have to be concerned there could be a sell-off, and you need to have a portfolio that you can live with. If the market does sell off, you don't want to change your lifestyle. And it's not just the equity market; it's also the fixed income market. I mean, we have interest rates that are close to zero, and if you do have inflation ever come back, you could have significant losses in the fixed income market, because when interest rates rise, the value of fixed income declines. So far, inflation has not shown. So far, everything seems like it's working fine. But if they keep buying every type of security they possibly can and expanding the money supply, at some point, it will cause inflation to come back. And if that happens, it will be very bad for the capital markets.